Get ready because the crypto world is absolutely on fire today, and we've got the breaking news you need to hear. The pace is relentless, the developments are massive, and if you're not plugged in, you're missing out. We're diving deep into the seismic shifts happening right now, bringing you the unfiltered truth and the insights that matter. From groundbreaking regulatory moves to community debates that could shape the future, this is your essential briefing. Don't blink because the game is changing, and you're about to get the inside scoop on everything that's making waves. We've got insights that will blow your mind and prepare you for what's next. Are you ready to stay ahead of the curve? Let's go. First up, we're talking about the major shifts in institutional adoption that could redefine the entire market. Think massive inflows and evolving landscapes that signal a new era for digital assets. This isn't just a ripple, it's a tidal wave of change that you absolutely cannot afford to miss. We'll break down exactly what this means for the future. Then, we pivot to the regulatory front, where significant doors are opening for U.S. investors in global crypto trade. This is huge. Regulators are making moves that could streamline access and boost liquidity, potentially reshaping how everyday people interact with digital assets on an international scale. We've got the details on how this could impact your portfolio. And finally, we're heading to the local level where passionate community conversations are shaping the future of digital asset infrastructure. We'll explore the debates, the decisions, and what it all means for decentralization and adoption. Stick around for all these stories and more. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Institutional adoption sees major influx. The world of digital assets is witnessing a significant surge in institutional adoption, a trend that could fundamentally alter the market landscape. This growing interest from large financial players signals a maturing ecosystem and a potential validation of digital assets as a legitimate investment class. The evolving landscape of institutional investment is characterized by increasing inflows into various digital asset products, reflecting a broader acceptance and integration into traditional financial strategies. These developments are closely watched by investors and analysts alike, as they often precede significant market movements and indicate shifts in investor sentiment and capital allocation. The increased participation from institutions not only brings substantial capital, but also lends credibility and stability to the digital asset space, potentially paving the way for wider retail adoption and more robust market infrastructure. As more institutions explore and engage with digital assets, the focus remains on regulatory clarity, technological advancements, and the overall health of the underlying networks. This growing institutional embrace suggests a long-term outlook, moving beyond speculative interest towards strategic integration and long-term value creation. The data emerging from these holdings provides a critical barometer for the sector's growth and its increasing relevance within the global financial system. It's a clear indicator that digital assets are no longer on the fringes, but are becoming a recognized component of diversified investment portfolios, driven by a combination of technological innovation, potential for high returns, and a growing demand for alternative assets. The ongoing dialogue between institutions and regulators is also crucial, aiming to establish frameworks that foster innovation while ensuring market integrity and investor protection. This complex interplay of factors is shaping a dynamic environment where institutional adoption is a key driver of mainstream acceptance and market expansion. But what does this mean for the average investor navigating these waters? Get ready, because the next story reveals how regulators are opening up global crypto trade for U.S. investors. Regulators' clear path for U.S. investors in global crypto trade. The United States is taking significant strides toward a more integrated and accessible global cryptocurrency market, with recent regulatory actions by the Commodity Futures Trading Commission, CFTC, and the Securities and Exchange Commission, SEC, poised to reshape the investment landscape. These initiatives signal a proactive approach to fostering a robust and competitive digital asset environment, aiming to bring more trading activity onshore and provide U.S. investors with greater opportunities. At the heart of this shift is the CFTC's enhanced focus on market surveillance and fraud detection, bolstered by the integration of Nasdaq's advanced technology. This technological upgrade is designed to improve the agency's ability to monitor trading activity across both traditional and digital assets, thereby strengthening its capacity to combat manipulation and fraud. Acting CFTC Chair Caroline D. Pham highlighted the importance of these improvements in ensuring market integrity, aligning with the broader objectives of the CFTC's Crypto Sprint initiative. This strategic push, launched in August 2025, aims to gather public input to refine the regulatory oversight of spot trading for digital assets, drawing on recommendations from the President's Working Group on Digital Asset Markets. The initiative seeks to address critical issues, including leveraged, margined, or financed retail crypto trading on registered platforms, and aligns with national goals to position the U.S. as a leader in crypto innovation. A pivotal development is the CFTC's regulatory advisory that clarifies the registration requirements for foreign boards of trade, FBOTs. This guidance effectively opens the door for U.S. investors to legally trade on offshore cryptocurrency exchanges, such as Binance, Bybit, and OKX, provided these platforms meet U.S. regulatory standards. The intention behind this move is to mitigate the regulatory uncertainty that has historically driven U.S. trading activity overseas, encouraging its reintegration into the domestic market. This could significantly enhance liquidity and offer U.S. investors access to a wider array of global trading platforms. Complementing these efforts, the U.S. Congress is also seeing increased activity, with coalitions advocating for protections for blockchain developers and non-custodial service providers. A letter signed by over 100 industry stakeholders urged congressional committees to provide explicit federal protections for blockchain infrastructure, emphasizing its importance for fostering innovation and maintaining U.S. competitiveness. These collective regulatory and legislative advancements suggest a concerted effort to create a more structured, transparent, and supportive environment for cryptocurrency trading in the United States. The potential impact on Bitcoin's market dynamics is considerable, with analysts noting that as speculative altcoins may face headwinds, Bitcoin could further solidify its position as a preferred store of value and medium of exchange, especially with increased regulatory clarity supporting its resilience. It's a regulatory game changer, but how are people actually using Bitcoin day to day? We're about to explore the evolving ways Bitcoin is becoming everyday money. Bitcoin spending evolves for everyday use in 2025. The narrative surrounding Bitcoin is rapidly shifting from a purely speculative asset to a functional medium of exchange, with 2025 poised to be a pivotal year for its everyday adoption. As the cryptocurrency matures, an increasing number of individuals and businesses are exploring innovative ways to integrate Bitcoin into daily transactions, moving beyond its role as a digital store of value. This transition is being fueled by a combination of technological advancements, growing merchant acceptance, and a desire for financial autonomy. The development of more user-friendly payment solutions, including Lightning Network integrations and streamlined wallet functionalities, is making Bitcoin transactions faster and more affordable. These improvements are crucial for competing with traditional payment systems and encouraging widespread use. Merchants are increasingly recognizing the benefits of accepting Bitcoin, such as reduced transaction fees, access to a new customer base, and the potential for enhanced brand image as a forward-thinking business. From online retailers to local cafes, the infrastructure for Bitcoin payments is expanding, creating a more robust ecosystem for everyday spending. Furthermore, the growing awareness and understanding of Bitcoin's potential as an alternative to traditional fiat currencies are driving consumer interest. Many are attracted by the prospect of financial sovereignty, protection against inflation, and the ability to conduct borderless transactions without intermediaries. This shift in perception is critical, as more people view Bitcoin not just as an investment, but as a practical tool for commerce. Its utility and mainstream appeal are set to increase dramatically. The ongoing innovation in decentralized finance, DeFi, also plays a role, with new applications emerging that allow for easier conversion between Bitcoin and other currencies or assets, simplifying the process of using Bitcoin for purchases. As we look towards 2025, the focus is on overcoming the remaining hurdles to mass adoption, such as price volatility and the need for greater regulatory clarity in some jurisdictions. However, the momentum towards Bitcoin becoming a more integrated part of the global financial fabric, used for everything from daily coffee runs to larger purchases, appears undeniable. The conversation is no longer just about holding Bitcoin, but about actively spending it, marking a significant evolution in its life cycle and its potential impact on the global economy. This growing utility is a key indicator of Bitcoin's long-term viability and its capacity to disrupt traditional financial systems by offering a decentralized, transparent, and efficient alternative for commerce. It's fascinating to see how Bitcoin is weaving itself into daily life. Now, let's head to a local level, where community discussions are shaping the future of mining operations. Local debate intensifies over Bitcoin mining moratorium. In Johnson County, Tennessee, the conversation surrounding Bitcoin mining operations has reached a critical juncture, with local commissioners actively debating the implementation of a moratorium. This move follows a divided vote on a resolution to adopt the County Powers Act, a state-created template that would have granted the county limited authority to restrict business developments, including Bitcoin mines. The absence of zoning in Johnson County has made such measures necessary for local leaders seeking to manage the impact of new industrial activities. The proposed moratorium is directly influenced by similar actions taken by neighboring Johnson City, which implemented a year-long pause on Bitcoin mining operations. County Mayor Larry Potter expressed the county's intention to learn from Johnson City's experience, stating, "We're going to be looking at what our neighbor does in Johnson City. Why not see what they're doing and the input they get from their research?" This approach reflects a cautious strategy aimed at understanding the potential benefits and drawbacks before committing to a specific regulatory path. The debate has been particularly heated in Mountain City, where previous discussions with a Bitcoin miner, CleanSpark, to establish a facility ultimately fell through in August. The Board of Mayor and Aldermen failed to approve the rezoning of the proposed property on Rainbow Road, halting those plans. For some residents, like Bill Hart, a moratorium would be a welcome measure. Hart stated, "If that's the least we can get, we need to at least do that to clear up a lot of the confusion surrounding Bitcoin, to get some experts to help us regulate Bitcoin if it were to come to the county." Hart voiced concerns about the perceived negative impacts of Bitcoin mining, citing, "Environmental pollution 24/7, electrical utility bills skyrocket, and it destroys property values in areas where mining operations have been established." These concerns were amplified by questions raised within the community regarding potential conflicts of interest, specifically concerning 3 county commissioners who have ties to Mountain Electric, the local power provider. While 2 commissioners, Freddie Phipps and Rick Wallace, addressed these concerns, stating their distance from or no influence from their affiliations with Mountain Electric, the scrutiny highlights the community's deep engagement with the issue. The Johnson County Commission is scheduled to meet again on September 18th, where the moratorium proposal is expected to be a central topic. Mayor Potter remains optimistic that the moratorium will gain sufficient support for passage, noting, "Depending on what they're hearing and where their heart is at, we'll see. I feel like this time it will pass." The outcome of this local debate could set a precedent for how other counties grapple with the rapid expansion of the digital asset mining industry and its intersection with local governance and community interests. Local decisions like these have a real impact on the ground. Now, let's wrap up with a quick recap of all today's top stories. And that's a wrap on today's essential updates. We saw huge institutional inflows changing the game, regulators opening doors for U.S. investors in global crypto trade, Bitcoin's evolution into everyday spending money, and crucial local debates shaping mining futures. Don't miss out on any of the action. Make sure you're subscribed, hit that like button, ring the notification bell, and follow us on all social platforms so you're always in the know. We'll see you next time.